In London is Clive Hyman, CEO of Hyman Capital Services Limited, and in Hong Kong, Dariusz Kowalczyk, Chief Investment Strategist, CFC Seymour Limited in Hong Kong. Well, let's start with you, Dariusz. Where does this stop? And now you have Citi saying it might be summer of '08 before they stop these write-downs. What's your take on that?
We think that the fourth quarter will definitely see losses in the banking sector globally related to the credit exposure of a magnitude similar to or exceeding that in the third quarter. And this is what is really dampening sentiment for the financials globally. We used to hope that the third quarter will allow the banks to come out and tell us what they really are holding, but it seems that the bleeding will continue for a while and indeed might extend to the first half of next year. However, the extent of the losses and for the first half of next year, whether they will be reported or not, depends on what will happen with the underlying indices related to bonds backed by mortgages. And you never know what's going to happen. So far the news has been bad, but it may turn around. However, it will probably not happen in the fourth quarter. So I would be still not recommending long positions in the financial sector for the fourth quarter of this year.
Clive, do you agree with that hypothesis? It seems that there's also not a whole lot of transparency here. We're finding out about these write-downs right as they're being taken.
Yeah, I think I have two concerns. One, I think the write-downs will continue. I think there are substantial losses that the investment banks haven't told anyone about. And second of all, I have transparency and governance issues as a real major issue. If the financial reporting system is coping as we think it ought to, then we ought to be seeing these losses recognised much more speedily. And I think someone has got to have a look at what's going on out there. I think my concern is that none of the transactions that are coming to light are actually started in the cash generation of the wealth of the economy, and therefore robbing Peter to pay Paul type schemes or getting rich with other people's money is coming to the fore again. And I think the nature of the scale of these losses indicates there's something far more troubling out there. So yes, I would tend to agree. I think fourth quarter is going to be much bloodier than anticipated, though.
What are the implications of that for the wider money markets? If it's going to be much more bloody, then banks are going to have to continue to recapitalise, which means want to have less money to lend to each other. So are we going to come back to the situation where we were in August, September, LIBOR rates going up again, and we're again talking about liquidity crisis?
I think the answer to that is a broad yes. In the short term, I think you will see the liquidity issues continuing. There's evidence in some of the markets that things just are very tight, and I think the credit committees that I've certainly been working with have they've taken their ball home almost completely. So I think the answer to that is yes, although I think the extent to which the central banks will intervene, I think you may see that going on, but not in the public arena. I don't think you'll see the public interventions that you've seen in the past. I think there's an awful lot going on behind the scenes that we're not aware of.
Dariusz, it's Maura here in Asia. I want to pick up on something you just mentioned earlier, which is that you would not go long on financials in the fourth quarter. For the most part, Asian banks have been spared the extent or the depth of the write-downs that European and U.S. banks have had to do. Do Asian banks provide you a little bit of coverage or safety then?
They definitely do, because their exposure to the U.S. credit markets has been much more limited, and they also have not been that much involved in securitization, an important source of revenue for European and U.S. investment banks, which has now to a large degree dried up. So the Asian financial sector, banking sector, does provide some relative safe haven. However, there are banks here that are active in the global scene, such as HSBC, traded on the Hong Kong Stock Exchange, so you have to be careful. But the Japanese banks, I think that they are not definitely not as deeply in that problem as their Western counterparts. And the Chinese banks, I think that their exposure is limited as well. So following the corrections in their prices in Hong Kong and Shanghai of late, they might be an interesting buying opportunity.
All right, gentlemen, stay with us for a few more minutes. We want to get some more strategy tips from you. Clive Hyman, CEO of Hyman Capital Services Limited, and Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour Limited. We will talk to them in just a few minutes, but also coming up. Now, let's return to our strategy panel. Joining us now in London is Clive Hyman, CEO of Hyman Capital Services Limited, and in Hong Kong, Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour Limited. Clive, I want to start with you and go back to Citigroup. I mean, obviously, these write-downs between Citigroup and Merrill, just tremendous, and we're going to see more spillover to the fourth quarter, maybe even the first quarter of next year. What's the effect on the global economy? How much of a spillover effect is there?
Well, I think you haven't seen nothing yet. The European banks and some of the other US banks have got similar issues. They're just not in the public arena yet. I think you're in tip of the iceberg territory. My particular concern is that this, what I'm smelling is another dot-com boom and bust type investment issue. And I think you're going to see some very spectacular disclosure issues as we get close to the fourth quarter. I think it is good, though, that the major banks are dealing with the issues the way they have. But I do believe that there was a complete feeding frenzy in the subprime, which wasn't perhaps quite obvious in the public markets. So on the stock tips, I would be telling people just to hold steady, but not to invest in the financial services in the banks market, because it's there's a lot of sorting out to come yet.
Well, Clive, let me put that to you. Is this the tip of the iceberg? And then where would you advise people putting their money, if not in the financials?
Yeah, I do think it's the tip of the iceberg, but I'd be getting into the commodities. There's quite a lot of growth out there, and I think the pull from China and from India and Asia generally is still there. And I think the newer countries coming into the EU, they have a lot of pent-up demand that's going to keep things in the commodity sector moving. So I think there's still a lot of growth. There's a lot of growth coming that perhaps has not been there in the past. So I think on the counter side, there will be some balance from the commodity sector. Perhaps utilities in Europe will offer some counterbalance to that. But I think generally, for the time being, sit out on the financial services. I wouldn't dump stock if you hold it. I would just hang on to it for the time being, just to see where things get to.
I misspoke there. Dariusz, I want to put this to you. Where do we stand with this? Tip of the iceberg, and where would you put your money?
I think that tip of the iceberg is maybe an exaggeration, although the cumulative losses that will be revealed from on probably exceed what we have learned so far. But the key point is that the capital of the banking sector will not be damaged badly enough to push it below the capital adequacy ratios, so there will be no systemic financial crisis. And I also think that the ability of banks to extend credit will not be limited to a degree that would hamper economic growth. Therefore, our view is that global growth and the equity markets will still see good times even this year, and we are fairly bullish on the equities overall, with the exception of financial and housing sectors. So I would be
jump in real quick and ask you, Dariusz. You're still bullish on the equity markets. Of course, Asian equity markets have seen a tremendous run-up this year. Is there still value in any markets in Asia?
Oh, definitely. Asian equities will continue to benefit from their stronger long-term growth prospects as far as GDP and earnings growth in these countries are concerned, stronger than elsewhere in the world, and from the fact that the global liquidity story will continue despite the current interruption. So the markets that we favor right now, by price-earnings ratios being the lowest there, would be Korea and Taiwan with strong local growth and P ratios around 15, below US levels, and Malaysia and Singapore, where they are at 17, which is below Asian average. We also like India and China, despite very high valuations there, because we believe that these valuations are justified by very strong growth in India and the fact that China will continue to be supported by local investors being unable to buy shares elsewhere.
All right, Dariusz, I'm sorry to cut you off, Dariusz. We're out of time. Thank you both for your takes on these subjects. Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour Limited in Hong Kong. Clive Hyman, CEO, Hyman Capital Services Limited.